For thousands of years, gold has been seen as the ultimate symbol of wealth. Kings fought wars for it, empires backed their currencies with it, and even today, central banks protect it like a crown jewel. When fear enters the system, money instinctively runs towards gold. That reputation is earned. Gold has survived every financial system humans have ever created. But here's the uncomfortable truth most people don't want to hear. Gold is respected, but it is no longer ignored, and that what changes everything. Today, gold is everywhere. It's tracked on every financial channel, discussed by every analyst, and already owned by institutions, governments, and investors across the world. Every crisis narrative already includes gold. Every fear trade already assumes gold will benefit, which means a lot of the protection, a lot of the safety, and a lot of the upside is already priced in. Gold has become predictable, and smart money does not chase what is predictable. Smart money looks for mispricing, it looks for imbalance, it looks for what the crowd is too distracted to notice. And right now, that quiet opportunity is silver because silver is not just a precious metal, it is a necessity. Unlike gold, which mostly sits in walls, silver moves through the real economy. It flows into solar panels, electric vehicles, semiconductors, medical equipments, defense system, and the infrastructure required for powering the artificial intelligence. You can delay buying gold jewelry. You cannot delay building solar capacity without silver. You cannot build modern electronics efficiently without it. Silver is consumed, and once a silver is consumed, it often disappears forever. It is not neatly stored, it is not always recycled, it is lost inside technology, inside a progress, inside the future. Gold is hoarded, silver is used, and that single difference changes the entire equation. Because while demand for silver is rising, supply is not responding the way people expect. Most investors assume higher prices automatically bring higher production. That assumption works for gold, it does not work for the silver. Here's why. Most silver is not mined directly, it is a byproduct of mining other metals like copper, lead, and zinc. That means even if silver prices rise sharply, miners cannot simply decide to produce more silver. They would need copper demand, zinc demand, and lead demand to justify new mining projects. So, silver supply is rigid, inflexible, and slow. At the same time, global demand is accelerating. Governments are mandating green energy revolution and adoption. Solar installations are increasing every year. Electric vehicles are no longer a trend, they are policy. And every single one of these technologies requires silver. This creates a pressure that doesn't explode immediately, it builds quietly. No headlines, no panic, no emergency, no urgency, just tightening supply meeting rising demand. And this is how every major commodity move begins, long before the public notices. There's another signal hiding in plain sight that every few people pay attention to, and it's one of the most powerful indicators in precious metals history. It's called the gold to silver ratio. Historically, 1 ounce of gold was worth about 15 ounces of silver. That ratio held for centuries across different civilizations and monetary systems. But today, that ratio is not 15, it is not 20, it's closer to 80 or even 90. That level of imbalance is not normal, it is not stable, and it has never lasted. Every single time this ratio has reached extremes, silver has eventually outperformed gold, sometimes dramatically. Not by small percentages, by multiples. The correction doesn't come gently, it comes suddenly after long periods of boredom and neglect. And that boredom is exactly what keeps most people away. Because silver is not exciting right now. It doesn't trend on social media. It doesn't dominate headlines. It doesn't create dinner table conversations. And that is precisely why smart money is interested. Institutions never announce what they are buying while they are buying it. They speak after positions are built. Retail investors chase excitement. Smart money accumulates silence when an asset feels dull, ignored, and forgotten. This is and that is often when it is being absorbed quietly. Silver is currently in that phase, and this brings us to the real difference between gold and silver, not in terms of safety but in terms of asymmetry. Gold preserves wealth, silver exposes mispricing. Gold offers stability with limited upside. Silver offers volatility with disproportionate potential. Gold is owned by everyone who wants protection. Silver is owned by every few who understand imbalance. When monetary stress meets industrial scarcity, silver does not move slowly, it never has. It moves violently, catching most people off guard because by the time it becomes obvious, the supply is already spoken for. This window exists only because most people are distracted. They are watching stock market noise, chasing short term trades, jumping from one headline to the next. Meanwhile, the real assets with real constraints are being accumulated quietly, patiently, and without attention. Silver doesn't need belief, it doesn't need hype, it doesn't need viral narratives, it only needs time. And that time is exactly what the smart money is giving it. So, the question is not whether silver will move. History already answers that. The real question is whether you will be positioned before the silence breaks, because wealth is rarely built by reacting late, it's built by seeing early.